little low on YouTube. Perfect. All right, let me go ahead and jack that up. All right, mic check. All right. So, yeah, like I said, we have a busy week ahead. What's going on in Texas? We got a busy week ahead, and we're going to go ahead and cover those things first. So, obviously, going forward, Monday, we don't have anything. As far as I'm going to really be focusing on the high impact data. And of course, we have and a lot of stuff going on in the world that can add to a lot of the things that are happening here on our charts, and as well as high impact. Of course, we're not going to be commenting on that. That is outside of what we are doing here. We are looking at funny little lines and trying to make money that way. So Tuesday, employment costs index quarter over quarter. We've got consumer confidence as well coming in at 10 a.m. So 8:30 before the bell, and then right towards an area where we want to see volatility. Wednesday, we're going to have ADP non-farm employment change, ISM manufacturing PMI, JOLTS job opening. This is going to be obviously 8:15 to 10 a.m. And then we're going to have the federal funds rate FOMC statement and press conference 2 o'clock and 2:30. Following Thursday, unemployment claims. That is obviously high impact. I got 50 dudes. I got like 50 dudes got the same name. Yeah, this is my real account. I'm the only one who could stream. These are my real hands. This is not pre-recorded. I can show you my feed if you want, but that's extra. No, I understand. And unfortunately, a lot of those people are always DMing people for shit. So who's my doorbell? All right. That is... Sorry. Just checking my doorbell. What's going on, everybody? All right. So anyway, we're going to go ahead and finish up the week with average hourly earnings, non-farm employment change, unemployment rate, and ISM services PMI. So this is a lot, and it should give us some big green, red, and green. Well, yeah, big green and red dinguses on our charts, and we like that. So, all right, now adding to the volatility, and of course TikTok. You guys might not be able to see this as much. Sorry, YouTube. All right, so we got a lot of earnings. This is Earnings Whisper. Starting on Monday, right? We have, we have SoFi, McDonald's, Pinterest. We've got, let's see, I don't know what the fuck that is. Public Storage, Wolfspeed, whatever the fuck that is. Moving into Tuesday, right? We got Pfizer, Caterpillar, JetBlue, Cameco. I know them boys. Ambigen, BP, right? Marathon. We also got AMD coming after the bell. So Paycom is actually an interesting one. I've watched that one before. Moving into Wednesday, right? We got Wayfair, we got fucking Estee Lauder, CVS Health, Norwegian Cruise Lines after the close, PayPal, Roku, QCom, Airbnb. That one's gonna be fucking really interesting, and I imagine. I don't know. That one's going to be really interesting because I think there's an expectation for that one to fail. And obviously go look at those expectations and see what, Wall Street is expecting. But Etsy, and then you actually have Melly, which has been, that is actually one that can pull off some pretty fire earnings. And then Elf, which is hopefully going to help my equity here. Not really a great earnings play, though. It is a good earnings play. I play it with equity. Anyway, so moving on, we've got Palantir. That's a favorite. Shopify, Lilly, Moderna, Crocs, which is actually that one's a mover. Apple, Carvana, Starbucks, Coinbase, Cloudflare, Fubo on Friday. I haven't seen that one in a fucking minute. CBOE, right? And that's about it as far as some of the bigger names that we like to look at. All right, so I'm going to cover my watch list really quickly, let you guys know what I'm watching, some of the levels that I'm looking for, and of course, I'm going to give you guys my outlook. And this is returning back to, and one of the price targets that I gave you guys last week on SPY specifically was cost basis, right? And that was dead slap center, right around that 410 mark, right? So we ended up hitting that mark. And then as far as I'm concerned, this is probably where we could potentially see a gap down. Now, and for terms of trend, we talked about an exhausted 1, 2, 3, right? We don't, anytime trend is moving, a lot of the times we'll see, right, that trend break or experience a form of exhaustion when it surpasses that 1, 2, 3 mark. And so we saw that on SPY. So that could be trend collapsing, but we know more realistically that is typically where trend expands. And this is the original, right? Starting off from this mouth, one of the areas that we were looking at as far as where trend can start. So for SPY, it is really, really simple. We wicked off of and tried to close above 412.30. That is one of the levels above us. That is 50% of the candle that we're currently dealing with. So just a simple move there may end up giving us a retest. And I expect at some point we will come back and retest the 420 mark. May not be now, but at some point we will. Moving forward, a favorite, and this one is actually, I haven't really touched my chart on the higher time frames. Again, 1, 2, 3, complete exhaustion. If you guys are more than welcome to hop on YouTube. I will be taking requests there. PotterStocks trading. Anyway, 1, 2, 3, and this is, I told you guys a long time ago that I was taking out that short position. I did. I had to hedge around it, made a lot of money doing that. And now the money that I thought, I was questioning whether or not we were going to see that position hold. It did. So I'm currently in an area where it is of interest for me to see or identify what would need to be held. Now, if you look, this is literally the box, right? This is a very serious floor because underneath this mark right here, if you just drop this line right there, take a look right there, previous resistance, and anything that, obviously these are wicks, but anything underneath this, right, falling underneath this, typically we experience some serious downside, right? Even just getting close to it, right? We experience some relatively strong downside. So that being said, we saved ourselves on the daily by holding, well, not me, but 288.19. That was one of our major floors we held. But we also didn't recover an area that we needed to, right? So in order to be bullish, you can see 2 big wicks off of that. So that is showing you where you would need to break. That's 299.50. The most obvious target above you is right here. This is a box, right? Simple. An area of consolidation has 50% mark. That is cost basis. So ranging between the 307, maybe 311 at the most. We are currently fighting an imbalance at that 299. So anything above that, you would see 303.75, which is again 50% right now. That is also a previous cost basis, so it's worth watching. And that would be one of the first marks I'd be watching for to go and retest this 307. So going into this week, a lot of bearish sentiment. This is also an area that I had labeled previously as the chop zone, right? So this is an area where we have experienced or could experience. And the reason that I label a box there and it says chop zone. Does that mean that it is already chopped, right? Or it's already oscillated within this? The reason that I'm saying that is because it's the only area that doesn't have volume, right? We're putting volume here. So this has volume all up in here. This has volume all up in here. But this area, it's missing a lot of it. So that's one of the reasons that we could spend a little bit of time, especially with what we're dealing with this week. So newer traders, quick and short, if you are here's how we can you can take what I'm saying from an opinion to a fact. If you open in range, right? Typically you're going to stay in range. It would take a volatile event or a market sentiment shift in order to break that range, right? All right. So again, anything underneath 288.19 on the daily, good. Anything above 299.75, and we're more than likely going to be moving into the 303.75. That's a short pop. Could be worth playing for a nice quick day trade. Again, a wick. The faster you go up, the quicker you're going to come down. So if you end up wicking up and then closing down below that, then look for that to get chopped on. All right, so moving on from there, we've got Tesla, which has been a fight. 1, 2, 3, 1, 2, 3. I don't think it's really a question. Cost basis has moved. My bad. We are sitting on look. Just look at where we're at. 50% right there. That is 208. That is the 207.50. God damn it! If you go watch any of my previous videos, we talked about 207.50. So directly underneath us, right, another leg down, which this one has seen a lot of that. We're gonna go look left, right? When we look left, we know that in this giant box, this is actually where we played Tesla up, and we saw that huge. I mean, I saw a lot of people. I haven't heard from some of the people who made money. They just were like, "I'm good." They took that money and they left. But that is right around that 50% mark. So it may be that we make our way down there in a choppy way into that 186. But at the moment, it could end up just being the top because we always play the most recent price action. Where we don't have volume here, there is volume there. So the top, right, is right around that 190 and 192.75. So I look for things like that, right, as confluences. So opening up here, looking down, it's 190, 150, and 190. Pretty simple. I meant to respond to someone and hit report on accident. My boy just reported me. Damn. Yeah, I'm gonna return this back to its original size. Right. Thank you guys for the likes. Appreciate that. Oops. Yes, I am on YouTube right now, live on YouTube. If you guys don't follow me there. All right. So anyway, that is Tesla. Again, I'll post most. Oh, this will be on YouTube for you to watch later on. All right, moving on. Affirm, small accounts. Unfortunately, the diagnosis here may be that we end up sitting around because we did bounce off of the $15, $16 mark, right? This is a space, right? If you take that away and you really look at where you're at, this is representative of, I mean, just period, end of story. That yellow mark, which we label those green. If you get a candle close above that, right, you're going to be looking at the 1875 and potentially 18 or 1920 mark. If you break through that box and you break the median, the 50% 1925, I believe that Affirm will fucking rip. Period. Now that being said, right? At the same time, on a higher time frame, on the weekly, right? This is what we have to look out for. So here's the weekly. Here's the same setup, right? And here's where we're at currently. So with this setup in mind, right, and knowing that it's taken 3 weeks and 3 giant ass wicks to push Affirm down, and it bounced off of the median, I am under the impression that if any major move or any sort of news or anything of that nature would send Affirm to the upside rather quickly. At the same time, again, wicks show 3 weeks in a row that buyers just couldn't do their job. So by breaking that $16 mark, I am looking for Affirm to end up moving down to this floor. This is going to be 1350, and I'll probably be taking out a longer short looking to target the 1050 mark, because this would essentially just be falling back into this floor, right? Basically where we see Affirm make these major moves down. So currently at cost basis in the block, right? Through the block, I'm looking right down here. You've got a little imbalance to maybe worry about at 1982, but I would just take that straight into the $10 mark. So, right. I'm always, what does open in range mean? So now on the weekly, I'm not, you can open range on the weekly and leave. But so if you open a candle, say next week, now if you open up underneath the 50% mark of a big gas green candle, yeah, a lot of the times you can go make a insignificant new low. But so let's just say you go down, you wick, and then the next day you open up right here. Your limit, or the limit to where you are more than likely going to go, is basically this, from here to here. So when you open in range, and there are areas where you open like this, 1, 2, 3. So you get 3 candles, and it's the one candle that closes outside of that range, right? So that's why we watch or look for certain setups to break us out of that range after a certain amount of days or a certain amount of touches, right? 1, 2, 3. Excuse me. So the first candle that closes outside of that range tells you that it needs to go and touch one of the next resistances. So this candle rips all the way up to 2250. And then the same thing, you fall back into that range, you break the 50% mark. So here, open, open. So you get 3 candles in range. So when a candle opens in range, and especially in here, right? Look at this. Shit day, okay day. I mean, you're going from 1883 to $20. So that's a good move. You can definitely play weeklies. You can play range. I guess for Affirm, it might be a bit of an anomaly, but something like Tesla, I wouldn't want to play with a lot of that. Now, again, I am speaking to more or less people who we know that we're going to make the majority of our money on big days like this and this, and we caught a lot of that. But it's the days in between, like this here. Let's go ahead and draw that out. So just this range alone, right? 1, 2, 3. So when you have a candle, basically once a candle opens up inside of another one or inside of another candle's wick, you may move out of it, but you're more or less going to stay within that range. And that doesn't make for the bet. So think about how many people went short, right? And then get absolutely fucking hammered. Now, we know we do not ever short into cost basis, and that's exactly what the fuck you bounced off of, right? Because you look down left and we draw our Potter box and we got a 50% mark, right? So, oh shit, spilled my coffee. Good thing it wasn't a lot. All right. All right. Anyway, yeah, welcome. How do you know which candle to start your box around your consolidation? Anytime a stock stays in range, right? So the bottom, and this is what I've taught in the PotterBox workshop. So who thinks the market runs on supply and demand? That's weird. Because well, whatever. Look, the bottom of the candles. 1, 2. Do you see these bottoms? That's the bottom. And then I go and I look towards the top, right? Now this is the daily. So this would be adherent to the daily. If I move down into a lower time frame, you may find that within one daily you have a box or 5 boxes, right? So like this is where it's fractalized, but it's still the same thing no matter what, right? I'm not going to short cost basis ever, like never. I'm going to always play the bounce off of the 50% mark of any area of consolidation. So the same thing goes here, right? These 2 candles, where typically where the candles close at the same mark, right? Right there, that is the bottom where they're holding that price. Regardless of where the wicks go, it's where they close, right? So that's what I'm more or less focused on. So how do I think that Tesla's going to stay in that range? So if you look left, right, where do you land? So you're landing on old areas, but you have all of this price action and you've retraced well past the 50% mark. And sellers are pushing you down, right? So if you go and look up, so again, look. Candle close. Now look at the 50% mark. Look at that shit. 2 fat wicks. Nobody's talking about that. Is literally, if you look at like right now, I'll tell you this. If you break above 214, 215, you're going to fucking see a nice big green ass dingus. It's going to be fire. You're going to see a big green dingus and it's going to fucking rip probably up into the 230s. Until then, you stay underneath that, and if you break this candle's current low, right? If you open Tesla below 207.33, dumpy. You open up inside of these candles, you'll probably wick down or touch something, but you're probably going to stay in range. Now, again, through a certain amount of touches, 1, 2, 1, 2. All right, at some point, it's going to break. Sorry, you guys on TikTok can't see the whole screen. I am on YouTube right now. All right, anyway, so back to the watch list. So again, we're watching Affirm. This is, again, the bearish setup right now. So we could be looking at continuation to the downside, right? Through the bottom of this candle. We're looking for a dumpy. We're looking for new lows. So honestly, the longer it stays sideways, the longer the drop will be. So anyway, Affirm, Tesla, Meta, right? And then finally, we're going to finish up. And I'm willing to add shit to my watch list, obviously. And I'm going to, we'll take a look at some of the stocks that people are watching, and I'll do some scanning tonight. So anyway, I don't know if you guys remember, all of the shit that you see right here, I talked about underneath that 351. We would move down to the 344 in balance, right? Big empty space, in balance, 50%, right? You're going to learn that that number is one of the most important numbers fucking out there, period. So that brings me to, right, the empty space underneath. Now, ignore the channel. These are always last. And they're obviously set to potentially expand. In fact, at the moment, I'm looking at context clues such as this, and I think that we could end up with a little bit of sideways action hitting our 333.50, which is right around an area of consolidation as well, and the top of this big bucket. So what I'm looking for going into this, and again, 1, 2, 3, you max out resistance. So you need to go and almost lose whatever channel that you had. And again, I'm always looking for context clues like that specifically. But again, the full channel extension, I can always go and clone and make sure that I'm on point. Do you see that? You see that? This is beyond, I can't use confirmation bias if I don't line up. You know what I'm saying? So like, I need to see good structure. I need to see candles fixated, right? On both the top and the bottom. Why the fuck does it look like that? Because it's math, baby. Look at that shit. So in combination, right, with our channels and the math and the projections and all this other stuff, we know that through this cost basis, at the moment, the target would quite simply be 338.78, right? The top of that box. So that's you looking at it now. Now, if you break that 340, 350, 338.75. If you take just a little bit longer, right? Then maybe we end up getting to the cost basis within that mark. All right. I could definitely see, I don't know what DAR is, but I just focus. Listen, so that is the beauty about this strategy. The strategy that I use, I don't need an indicator. As you can see, I don't even have volume. Most everybody uses it. I don't use it. I don't need it. I know there are just quite simply rules. I don't need, volume is not as accurate as people claim it to be. I mean, you can manipulate it. Volume. And in fact, on the highest volume days, oftentimes, if you were to go and look at volume, you'll find that the highest volume comes at the tops and the bottoms, right? Or not even at the bottoms. A lot of the times it's the tops where you have people buying against the major selling. But I don't. And again, everybody's, you use whatever works for you, but I don't want anything that's going to give me a bias at all. If I know that there are rules that are based on math, based on structure, based on harmonics, if you want to look, if you want to throw that in there, but that's just me. I don't even look at, I mean, and this is again, TTI uses the 200 EMA. He uses RSI. They have a completely different game plan, but at the end of the day, it's only the price that's going to tell them to get in. All right, anyway, so the Qs, that's what we're looking for this week. We're looking for a potential break underneath. Now above you, channels out, right? Because we don't need to focus just on those. What's above you? Where don't you want to go? Where, if you were a seller, where don't you want to go? I'll tell you where you don't want to go. You've already shown via price where you don't want to be. Look left. This was a previous buy floor. This is 347.75, right? Followed by 348. Basically the same floor. Now, that's a box. The 50% mark, you've wicked off of it. That's 350.50. There you go. That means if sellers have used volume to push against that wall and you open up again or above that 348, right? You open up above that 348, or even you open up above these red candles. There's an effort that is being done, or that has been made to hold you underneath 347. So above 347, you can try and hold and break. And all you would have to do, another tip here, is break that 348.82 and ruin the lower highs. Make a higher high and close in the box above. From that mark, we would need to break cost basis or the previous cost basis to move into the imbalance and the previous floor of 353, because that's not the punchback, or the area again that we would be most concerned with is the area of most recent price action. We're not worried about every box that's ever lived. We're only worried really about the one that's above us. So while we have a buy floor above us that we need to get to, it's this one that would likely be retested, and that's 354. 354. It's that simple. Now there is a previous floor, and it's pretty much mirrored along the same area, but again, most recent price action. But that one would be right in that 352.50. The bottom of that candle is at 353. We know that the Qs have given us a fight in that mark. So I wouldn't be surprised in intraday price action if both of those targets give us some trouble. So listen, I don't know how many people have told me, like, yeah, exactly. Yeah, I don't know how many people have told me. Here's what I've learned. There are people whose job it is to, I mean, it is literally their fucking, they get paid just to look at the chart. They get paid just to analyze these things. And they fucking, I mean, and there's thousands of them, right? Of experts. And how many of them just simply, quite simply, just don't agree? And then they end up fucking wrong. Whether or not they're fucking employed by CNBC to fucking pump or dump a stock, but like they're wrong. So like when I listen to somebody's transcribing of macroeconomic or whatever data, right? I know that the market is always looking 12 months ahead. So what we may be responding and analyzing now, that's already probably priced in. So I even that, and it's probably maddening to some people, like nothing, like no, nothing, because again, I am now like in a place where I feel like without even knowing what economic data we have, if I really just sat and looked at the chart, I could just trade the chart, right? Save for the fact that you have like certain things like Powell talking where the volatility can go fucking through the roof, right? So I would just not trade an area like that. But for most regular, days, you know, it would just be the focus on price. But even if that is your base, and that's you're saying, okay, well, my focus is on this, then you can do all of the analyses you want past that. But as long as you're focused on price and you're focused on, okay, candle opens on top of that 354, the first target is the 50% mark of that area of consolidation, and that's your target, right? Regardless of the fact that, you know, the elections are coming up. It's just a matter of, because that gives you a baseline to place your rules on, because you can't put a stop loss on a fucking, you know, on war, you know. So like, anyway, yeah, exactly. All right. What data package does the news make the market, or does the market make the news? That's a good one. Um, so you should probably have everything, all of the NYSE. You need also use 24 hour, so rather than daily. So again, if my chart looks, you know, different than yours, and we also know, and this is again something that not a lot of people teach, but it is important. I and again, I do look at both. I have come to the conclusion that your if your big movers or the smart money is coming in after hours, then why the fuck would I leave that off my chart? You know what I'm saying? Like, why would I leave the most influential part of the market off of my chart? So I look at it all, right? And I found that you know what I've also found? The boxes don't exist. They don't exist. The closes, none of it, right? They to some extent, but it doesn't look like that, right? Where you just quite simply have a candle open up against the bottom of a resistance, and you can say, yeah, that's not going, right? Not until it goes and bounces off something. So anyway, is the height of the block based on the number of maybe, yeah, you could say that. So again, this is something that works from the daily to the lower time frame. So on a 3 minute time frame, right? Because I can trade any time frame, but if I'm looking at like the 3 minute, right? A box doesn't have to. It doesn't need to fit a prerequisite for touches, right? What I'm looking for is just the tops and the bottom. So this is the 3 minute. This would be my box, right? And then I go and I look and I see, okay, you touch that box, cool. And then from there, I'm typically looking at the box that I had that I've made underneath me, right? So you did make a. So this is again how if you're trading on a time frame like this, you got to be tight with it. And the concept behind this is, okay, if I have a box, I'm going to split that box in half, right? That box, that median is going to be called cost basis. That's where buyers and sellers decide whether they like the price. So if this candle goes and makes a new low, bounces, recovers the bottom of that floor, this is where I like to set up my trade, right? And I take a lot of shit early, but I say, right, you know, again, if you take it up against cost basis or whatever you end up doing, I like to try and be in at the floor, right? So when I have a stop loss set, I know that a candle that opens up underneath from that, so we'll move that back up. So 50%, right, of that box, and we're looking at, you know, just that, but no, you guys can't really see that. So that box, right? And then what I'm going to do is I'm literally just going to go and put the bottom of this green line here, and we'll increase the stroke. All right, so then I'm going to go look here, and I'm going to say, okay, this candle closes on top. Now, the difficult thing is well, look, you've got wicks. That's the tough shit. You got weeklies that expire today. You got to be on the 1 minute, right? If you got a contract that expires, you know, and it's Monday and it expires on a Tuesday, and again, I'm looking at by the time the candle closes. So we're moving into the 30-second. I have the timer on. 30 seconds until this candle closes. I see that it's bounced and it's going to recover. I enter. I'm trying to be as close as I can to the bottom. From there, cost basis is broken. Again, candle close. And I know that you're going to go and make a new high, right? You're going to go make a new high. This is difficult price action. And would I play it? No. I would absolutely not play that. Period. It just wouldn't be it wouldn't be the type of price action that would reel me in. And what I would really want to know, or what I would really want to do, is I would want to look at this giant fucking chunk of a block right there. That giant chunk. And once a candle closed underneath it and gave me the grappling hook, right? We're Batman. So what you want to do is drop in when you're short. Same concept, right? You got a 50% mark. Look where the candle holds itself up, right? I want to be with sellers. So if I'm short, even if I get in here, right? And again, your expiration matters. Even if I get in here and I say, if you break a box, right? If you break an area of consolidation, you are going to, when the 50% area of that box is broken, you will go make a new low. Your job is to find where the fuck is that low, right? This low happens to be your pre-market lows, or right around them, and that ends up being, well, also that daily cost basis, right? 343, 344. So I would want to see the grappling hook, right? The drop in, the hook. This shows me that sellers who control this mark right there are in control of the price. They will not let buyers have it back, because buyers ultimately held on to this floor. Look, I mean, it's just right in front of you. 1, 2, 3, 1, 2, 3, 4, 5, 6, 7, 8, right? You drop in, you don't let them have it. You pop back up. Look, you got to go all the way back up here to retest some sort of something, right? And this ends up being the almost right around the bottom of that floor. So it gives you a baseline to say, okay, right? And whatever happens in between here and there, obviously that's not my trigger. Candle close inside of the box, you've got patience. If it drops too fast and you're a crackhead, you're going to take it there and you're going to get faded. If you know how this works, which we do, and the candle closes in the box, and then the next candle closes underneath cost basis, all right, go for it. Set the stop loss at the median and move on from there. But if you wait and you let sellers show you who's in control, candle closes underneath, red candle, right? Obviously it's red there. Look, magic. Magic, it's not fucking guesswork. Look. Nope. Right? Hold on one second. You can see these two candles, right? Cost basis. So while you're in this bigger block, right? And you're saying, okay, well, I need now, do I just take it, right? When it's up against that? No. You can use, how do you break this much larger area of consolidation? You use a smaller one. If that breaks, it will give you a new low. If you don't trust the system doesn't work. But if you go, and again, it takes time to look and watch this. If you watch this happen, it always happens. It is just how the market works. And we can tell the story on why that happens, right? We can look at it from the same perspective of why when you get into a trade, you feel like it goes against you immediately. That's why the market, and that's how we know the market does have a system. And we better be glad that it does, right? Because then we can utilize it. So you break that 50% mark, we know that gives you a new low. That new low just automatically breaks this area of consolidations, 50% mark, therefore giving you the next series of red dinguses. Okay, so anyway, that was my watch list and a small fucking add-on PotterStocks little lesson there. So that'll be good for people watching this back. And I'll be making a video on this. It's important to remember that if you're on the 3-minute, the only thing that can invalidate this is going up against or being at a daily or 4-hour cost basis. What happens in between that, right? We're not, sorry, but we're not, as soon as that candle touches it, you're either playing the bounce or you're fucking out, right? So now we await the next signal, because look at all this fucking juice, dude. This is all us. We can play it right down here. It will bounce, okay? Listen, you can clip this shit. It will bounce unless we fucking crash at 338.80. 338 and some change, right? Mark my words. When we get there, if we get there, that's where you will bounce. I told you guys 344. I was 75 cents off. Shoot me. I was 7, but the candle close, right, was about to be 344, but it's at 345. But 344 was this imbalance, right? What is an imbalance? Don't make it as, it sounds really complicated. It's not. Just take the look. The bottom right there, right? We'll leave that as the bottom. We're going to take the same thing. We're going to do it right here. And then we're just going to 50% that shit, right? Right there at 50%. Oh, shit. My bad, y'all. Y'all missed that. So box there, 50% of that, 344, right? So when 344 is lost, goodbye, right? You'll see some bounces in there. There's 341.50. We move in fractals, but it's 338.72 would be my next target. So, and what happened here, right? What happened here was the same thing. And I told you guys, we're basically at the fucking mark where we should be looking at the potential for a new low. Because what happens is you break cost basis, right? It doesn't matter how it happens. Break down, you actually make a new low, retest the top, and then open up underneath that same mark and you dump. But it still breaks through that cost basis. So anyway, now, if you guys have any requests, especially those of you on YouTube, you guys feel free to go ahead and drop those in the chat now. I, again, will update you guys tomorrow morning if you guys are in the Discord on what I'm watching. And I don't want you to take this as a I shouldn't trade because Garrett said. I want you to look for signs of chop. How do we identify that, right? Obviously, if you open up in between two levels, right? If you pop up on top of 347.80, you got all this juice. Excuse me. You can go and play that up to its 50% mark, right? Which is already wicked off of twice, literally, right? You could go and try and play it up there, which kind of showed me that it's probably not. Or you can wait for a candle to break below that our lows, right? And basically what we want to do you see this? This is as simple as I can make it. Higher. That's higher, right? And a lot of the times this is where your little up. Watch this. I'm gonna take a picture of that. Screenshot that shit. Come back. Watch. We're gonna end up fucking shooting up, touching that, chopping sideways. Let me draw this. I like to do this so I can brag about it later on. Also make money on it tomorrow. Right? Chop it up. Maybe. Ooh, look at that. We're going to fucking have a seizure right there. Then we've got, wait, hold on. Why am I marking that? Now look, most recent price action. We could already potentially look at, I don't know what the fuck kind of trend line that is. I am really sorry. And again, how this happens is as long as you continue to make, I just not going short, right? I don't know what this shit is on, but it just won't let me draw. So anyway, that is a, yes, I will take you guys' request. So let me go. I'm just finishing that up. So that is my current diagnosis for where we could go from there. And this is very descriptive. Look, this is the data. This is the chart. A lot of volatility, decent range. Nobody's winning. Right? And I can't tell you, dude. You could fucking rip there. You could do the back and you could do this. Remember Tesla? Remember this shit? We played this shit like fucking pros, dude. It was that was actually an impressive feat. Impressive feat. What did he say? What did he say? Look at this shit. Same, and we were able to map that out before it even fucking happened. That was the dopest part of that. Is I literally had this drawn. So look what I just showed you here. and then look at how this is set up, right? So Tesla, right? Lots of now 1, 2, higher high, higher, higher, right? Once that trend is broken, now that's a simple concept. Then we add the PotterStocks system to that, slap our cost basis in there, and there we go. Now that was earnings, but all right, where data pulled off of? What? What's up, Ozzy? How's it going, man? David, repeat that question. Hold on, let me see. Let me scroll up here. David. How do you use the fib tool? So I have come to the conclusion now that the fib tool is lagging, right? So look, do you see where the fib just lined up? Do you see where my level is up above me? The fib comes in afterwards, but it basically is just highlighting points of control. My cost basis below me and I forgive my giant, but this was like a big ass box. I think it was right around there. My cost basis within that box is right in there. Now, the funny thing is we'll fucking I mean, look at this, right? Listen. How does that fib help me identify what I already know? And what I know is that within an area of consolidation where a candle stops and a candle stops and a candle stops, it doesn't matter if it's 2 or 1 or 3 or where the wicks go, it's where the candles close. Why the fuck is it always 50%? I'm just, listen, I'm not telling you guys something I found in a book. I'm telling you something that I found over and over from experience, over and over. And I don't believe anybody. You guys shouldn't even believe me right now. You guys could go see for yourself. And I think that's how you should know a system works, is you get a piece of that information. And you could use this and combine it with an EMA that I don't even use, and maybe you end up coming up with a system that works far better, right? Maybe you're able to find a signal that happens and gives you context clue. Who knows? But this is a great baseline, right? A great structure to build off of. So, all right. So obviously those of you who comment on YouTube with your request, those are priority. So I will go ahead and take those. We'll take some requests, obviously, off of TikTok. I'm going to go start those now. We're going to start on the daily, and we'll move down a little bit. So the first one I saw was Apple. And thank you, Past Me, for charting this. Damn. Come on, man. I haven't even been here in a minute. It is busting. So I believe I had a box here, perhaps. Where did we bounce off of? Nope. Not right now, buddy. All right. So by the way, TikTok, you guys have about, I have 18% left. All right. So we're going to kind of, I'm not going to really focus in on this chart at too much. What I'm going to do, it looks like he still might have a little bit of downside here. Excuse me, I'm not going to focus on this trend too much, right? What I'm going to focus on right now, because of, and really it's not super clear. So I'm going to go to the weekly. This is really going to help me out a lot, because when it comes to Apple and something that, in my opinion, runs not in a deceptive manner, but no, it does. No, yeah, fuck that. It runs, when you look at the way that Apple runs, right? When you get things like this, it's not that the system doesn't work, right? It's just that the system repeats itself 5 times in one area, right? Where I could go play Nvidia and I just get the juice, right? I play Tesla and I just get the juice. Excuse all that bullshit, right? AMD, trash. No, a little bit of juice. A little bit of juice on the upside, right? When it's trending and it's hot, that's when it looks good. And that's when but look at that shit, dude. You look at that chart and what you're looking for is news. What you're looking for is something that's going to break that shit, right? So anyway, back to Apple, right? The daily shows me that, yes, and I can make this really simple. The simple part of this is, if you're bearish, you don't want to open a candle right here. And that's 170. Now that's simple. That's psychological, right? That's simple enough. But one thing that I noticed as well is that you are unable, or you are held down below 168.13, happens to be 50% of this big red dingus, right? And unfortunately, your floor or the nearest box, well, maybe fortunately, is all the way up there at 172.50. So I'm going to zoom down really quickly and look at the 4 hour. And this is what I can help you with, where I can say definitively, yeah, if that breaks, you're done, right? If that breaks, not you're done, but you're going to go make a new low. If that breaks 160, it looks like 167 even, you will go make a new low. I imagine that would be probably right now. New low means outside, the candle will close outside of the box, or it will make an effort. It can wick down to a new low and then close up in it, and it still counts, right? Because obviously that's playable when you're on a higher time frame. But ultimately, a candle close underneath that would signify, yes, you're probably going to go down to a level that you would need to identify on a higher time frame, because there's nothing but empty space here, which is why we're out at the weekly and we're saying, okay, where did you wick? A lot of the times the chart will tell you what is below or above you. Why didn't you close there? Why did you bounce there? These are questions that I ask myself, right? So I go and I look, I move that down, and I can already tell that something is right here. That's 165.81, right? So I'm going to drop my candles down to that, and I'm going to go look for the bottom. All right, so that's a rough guess right now, and I can brush that up. But what I'm going to do is I'm going to say, well, why are we holding that 161 up, right? Clearly it avoided something. So I'm going to go and drag another line, and I'm going to, ooh, damn. Yeah, so take a look right there. See that big ass red candle, right? Now this does not end up being the resistance, but it does end up being an area that if you open up below, if you move below, you're going to make a new low, right? And previously in an uptrend, if it was broken, right, you made a new high. So I'm going to expect the same shit to happen there, right? And that would be via a cost basis break. I'm saying 163.31 on that. Now above you, the same thing that I just said, right? Candle close, keep it simple, right? Now I'm going to tell you right now that anytime you see that empty space and there's a wick, typically you're going to get a body, some sort of volume in there that closes in it. Now it does not, what the fuck am I even saying? Does not have to happen now, but we are going to apply our cost basis, which you can see you sit on top of before creating. So it would be a open above 171.11 and a break of 174.85, and that would allow you a potential pop back up. Now 1, 2, 3 is the magic number, right, when it comes to resistance, but I don't leave these things out. Do you guys see that 1, 2, 3 right there? I don't leave that out. There's something, it will come back. Ooh, juicy. So I wonder, when I look at this, right, if there isn't a possibility, because we are bearish, to start one of these numbers, right, and maybe even, right, give you a little bit more, wedge out, and then a violent retest back up with maybe Israel news calming down, or it could be anything, right? And that may happen rather than here than there. But what I do know is that if you are going to establish yourself in a serious downtrend, just like you did before, look at this shit. Oh no, we're bear. Shut the fuck up. Oh, look, we're bullish. Nope, back down. So it is not outside of the question to even go and pop and move, but I would be looking at a candle open 171.50, 171.11, and that should give you a move through cost basis at 174.85 and 175. And I again, you would look for a candle open above that chart, 174.85, right where those red candles close. And I would just aim straight up to wherever your resistance is. So, all right. So the next one is Tesla. Am I taking any earnings plays? If you could show us the chart for why you're taking it, Antonio. I don't want to do that on a. I don't want to do that in a recorded setting, dude. That means people are gonna follow me into my. I mean, oh man, it's crazy. You know what? I should start a gambling part of the Discord so it's like automatic. People just auto. You can't. I'm just gonna specifically say this is gambling, and if you're gonna get caught. All right, so let's look at Tesla. This is probably one of the more interesting and like dynamic charts. This is a channel that we ended up, and we saw some of the greatest volatility we've seen from Tesla as far as just direction, trend control, right? All of that stuff. Really good shit. 1, 2, 3. And we did the same shit, man. And that really sucks. It hurts. But what I do know is that while people are drawing this, and I drew it too, because that's all you got at some point, right? They're drawing this and they're saying Tesla's broken. That's not how this works. Trend sometimes, and again, we could be moving down. I'm all for it. But trend sometimes is really deceptive. While it does not, I'm looking for context clues like that. Look how you build, right? Look how you sit on top. Now, there's deviations to this, and that's how I can further figure out, because as long as you're moving up, right? We are in a higher time frame downtrend. Period. That is just period. You are. So right now we're in an area where look at where Tesla closed. You're either about to begin a move into this box, right? And it's just so happens that my projected downtrend or uptrend is right around the 50% mark, right? Right in that 188, 189 area that I've been talking about. Everybody's talking about 190s and all that other shit. I'm saying 189, maybe 188. You could wick, you know, but that's where I'm looking. 50% of any area of consolidation on any time frame. Now, from that, or you know, looking at that as a possibility, a lot of the times I'll clone my channel because I'm focused on the uptrend right now. As far as I'm concerned, this is the uptrend, right? And so that's not gonna work. I'm gonna take that, I'm gonna clone it, and I'm gonna chop it up, right? And I'm gonna look for further context clues like that, right? Where you sit on top. That, where we wick off of or close underneath and flush. Here, where you're holding on to. So I'm looking for small context clues like that. Here, where you ride on it. So, pause. Anyway, this is the long-term trend. So as we got this kind of ugly candle close here, it did not close below you. But what it does do is put you in danger of a small gap down below 207, which would, yes, give you a leg down, and the first target would be 193.60. You move to the daily target, and this is where we have a little bit more clarity, and we also have a previous trend, right, that we are looking at. Where's the floor, right? Where is the dynamic floor confluentially going to land? And that's where we can kind of see us buying time. Anytime you go sideways, you're buying time. You're pricing in something below you. And so with that target of 180, and again, it was 189, right? 187 area. That is something that if you fall Monday, you really only have 190, 150. So it could be a bounce, 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 and you skid into it. But I don't think that, I think we either get one more leg down strong, and I think we pause and bounce right back up. I am right now in an area where I am going against the grain. The grain says StockTwits, Twitter, bearish, bearish, bearish. So give them what they want, bounce it. And again, if we're going to go continue moving to the downside, you will establish where resistance is. You will. So that's a period for me. You know, I feel that with another leg down from Tesla, we should be looking at a sideways move and then a pop up to retest some of these levels that you've broken. All right. This makes it seem like algos only trade in channel. Algorithms, I mean, I have a lot of theories behind that. One of a long time ago, I charted Dollar General. I mean, this is ages ago. And one of the things that I had found, I don't even know if I could chart it again. One of the things that I had found, and listen, I charted this before it was there. I think, you know what? I think it was right here. And I remember this was one of the first times I used a channel, right? It did not line up. Like it actually lined up more or less like a wedge. I remember it was actually a wedge first, and then I remember I put a channel on top of it. Yeah, I think this was it, right? And so I saw this wedge, I saw this channel, and I mean, I'm literally talking about it was right in here. And again, this is probably slightly inaccurate, like time wise, but it ended up, I left it alone and I came back and the shit fucking did not, it like oscillated a little bit. Coco, stop it. What the hell, dog? Hold on, let me let my dog in here so stop fucking. She's got attachment issues. Come on. Come in here, big dork. Yes, 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 I'm alive. Yes. German Shepherds, dude. They don't let you live. All right. So let's go from there. We've got Tesla. I see somebody talking about McDonald's. You know they own a pizza place called Donato's? Anybody know about that? It's actually really good. It's actually good pizza. It's pretty good. I just had some because I live right next to one. All right, so McDonald's, we're starting on the weekly. I like to do this anyway. God, dog, man, I tell you what, the chart will tell you, it will give you the answers. Above you, this block, no, 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 you can't go there. So what I'm going to look at, right, is anytime I have a big ass candle like that, I'm going to always look at kind of like the 50% mark. And that's going to be right here. That's going to be 153.65. Underneath that, you can see the wick there. So underneath that, I would imagine you're going to box it out. And that probably means that you're going to create something along the lines of this. Now let's go to the daily. You son of a bitch. Now that's down. Now I've got a lot of channels here. And these channels are still rocking. So I haven't touched this shit in a minute. So let's see what's happening here. Oh, fuck yeah, dude. That's how you get started. Coco, are you throwing a fit over there, dude? Yo, this is actually fire. Super fire. Yes, sir. Okay, so check this out. I actually have this one. This is gonna be a good one. All right, so below you, the no-no zone, your no-no square is right here. This is 152. You don't want to go there. But what I would, oh boy, oh shit, sorry. I'm having a fucking, what is that thing that Jimmy Neutron has? A braingasm? No. A brain blast, dude. I'm having a brain blast. Check this out. Check me out, dude. We're gonna put cost basis right there. We're gonna make that. We're gonna tone down the stroke, and then we're going to look below us. I would be looking for a bloop, bloop. Will you fucking release? Thank you. And then I would look for a god dang one of these things right here. Big old pop up there. Something like that. That's immediately what I see. Because what you maybe because here's the thing. And this is you might end up having something that's a little bit more aggressive, right? I might be off in because you might end up having something like this. I don't have the bottom yet, right? So my best guess, yeah, actually I'd probably move it like that. Is a tap off of the box below, because you don't want to go underneath that. I say wick down, bounce, and then move back up 167 area. You have a box above you to target right there, and you already got a big fat wick off of it, so that might have been, but that would be right in there. That's 165.80. So yeah, I'd probably be coming out of that. I would look for something along those lines. But underneath that, right? So we don't have a bias, 149.75 broken to the downside. I would be looking for a new low. But what I was going to say is this channel, it certainly looks like you're trying to recover. And that's one of the strongest things that you can see. And that would give you, again, if you wicked down and touch something below you, you would likely see an explosive move up. And that small channel would probably break, right? Maybe you go and retest some shit, but you probably break. But I say 170 could be the max on that. That actually looks pretty interesting. But yeah, you're in a good spot to trade McDonald's. So all right, the next one I see is Nvidia. All right, so everybody and their fucking mother is talking about a Head and Shoulders. Well, they can shove that Head and Shoulders wherever. But what I see is a big ass box, and I see a stock that doesn't want to go there right now. Not at least right now. At least right now. Right not now. I am slowly losing my ability to speak my native tongue, and I don't know what's happening here. Too much aluminum in my diet. All right, so we've got a floor there. That's 405. You held it. You held it. Look what happens when you hold things, right? Hold on. Look, that's the same. I'm gonna like make this big. That's what she said. All right. Look. Hold it. Boing. Right? Hold it. Hold it. So what I drew there, what I drew right here, I think that might end up being probable, right? I really do, because when everybody sees the same thing, and I have a bad habit of going against the grain always. Not the chart's grain, but if someone says to me, that's a Head and Shoulders, and it's just glaringly obvious, I'm like, yeah, that's going to probably bounce first. You're not going to get listen, we don't typically leave off of this. You're going to go and touch and put some volume in there a lot of the times. And that's why I'm thinking there's a retest of like 451.85, potentially 456 would be my retest target for Nvidia. Now, I have a trigger for the Head and Shoulders, and right now a drop to 389.50 is still permissible. You could still go down, bounce off of that mark, and pop right back up. But if that is broken, go for it. Fucking go for it. I've got a target 345 to the downside. That is the imbalance and 50% mark of this giant green dingus. Yo, tell me why market crash? Oh, that's just like that's just some clickbait, dude. I'm sorry. I'm sorry, Dad. I had to clickbait you. I'm a master clickbaiter. What? Antonio, what'd you say? Are you taking earnings plays? Oh, I'm not gonna get banned. Wait. So answer the question. Jesus Christ, you're so bossy. Yeah. So, well, here's the thing. That is the theme. That is what everybody is talking about. So it's not like I'm just pulling that out of my ass. I am trying to give people something on the other side to look at, because we want to play this smart. And when everybody is bearish and everybody is buying puts and all of the money is to the downside, where do we think the market's going to go? So that's my current analysis on Nvidia. All right. So anyway, moving forward. Yes. Guys, I'm trying to take as many requests as I can, but I'm also not going to do a shit job. Okay, so with AMD, if you guys take a look here, this is the same way that we saw Meta close. Above you or right beside you, you have $97. 97. I think it's actually 90. Yeah, it is 97 basically on the dot. So you have a floor, and that is right here. That is $96. You closed on top of it. So it is possible that opening up Monday, if you open up above $96, that you could end up going and pushing through that $97 mark straight into my target of the median at $98.75. That's really it. Maybe I'm off and maybe $99, but I say 97 and some change. Otherwise, you have a bounce off of the 96 or 94.50 area. That is cost basis. That is the median in this big green candle. I'm sure if we go to the downside, I could show you the same exact thing because fractals don't lie. Here's cost basis. That is 94.50. Boom, bada bing. Don't go there. If you go there, you die. Don't break 95.50 either. That would be bad. This is descriptive of a channel. There's a channel here. I can't see it yet. Hold on one second. You know what a funny lake name is? Is Lake Titicaca. 95.85 bounce maybe into the 98s because 98 technically would be more of the imbalance. But this looks like guys, this looks like sideways. I have a feeling Monday, Tuesday, we might see sideways action. We'll see. That means trading in range. That means you can play some quick trades. But as far as break like one of these bad boys, right? Or, you know, even just a solid green day like that, we'll see. All right. I do not trade futures. No, I do not. Not right now. I have looked at Meta, yes. All right, so the next one is my, yeah, you got to DM me on Discord if you want to get into the PotterBox workshop. And again, this is, the information is free. It is, if you're hard, and this is, you're not a hard worker, but if you're new or you've had a shit time in the market because of patterns and candlestick names, I'm trying to help people unlearn, and this is a start from scratch. This takes a lot of my effort and a lot of my time, and I'm going to charge for it. The shit that I just put out about my strategy for free, you guys can use that and utilize it and ask me questions. So it is not a necessity to do it. But if you want it all in a pre-recorded or recorded and reviewable platform, that's what that is for. So, all right. So the next one, I see Cliff. I also saw JetBlue. Anyway, for earnings, man, before I go any further, listen, I have an account especially for taking earnings, my small account, so who knows what the fuck. But, you know, just to give you an idea, SoFi is cheap. I'll probably play SoFi. McDonald's, probably not. Pinterest could be interesting. It's a shit stock, and could just be end up going down. So it might be fun for puts. Pfizer is one that I've been watching. Not sure if that's a optionable stock considering how much market cap control that one has. AMD, never. Well, I mean, again, that one, or honestly, earnings could set that one the fuck off. So again, honestly, I can't tell you what I know I'm going to trade because I'm going to look at it literally. I know that there's ones I will. SoFi, I will. Roku, I probably definitely will. Airbnb, 100%. I'm going to try and play that one. PLTR, yes. But whatever else, maybe Coinbase, right? Where's the Discord link? Hold on. It's right here. Go to the free Discord lobby. I have a weekly if you just want to check us out. I don't have any trials open right now. I do not have the PotterStocks workshop. You have to DM me on the Discord because this shit platform is being an ass. So anyway, www.wap.com/PotterStocks trading, all one word. All right, anyway. That's fair, but I'd rather not agree with you given the truth. I have a bias and I'm fairly strong in my previous. What are we talking about? I have no idea. Yes. Can I look at IBRX? Sure, we'll take a look at that. Let me do JetBlue. All right, so JetBlue absolutely fucking demolished. I mean, how bad does it get? Where are you? That is the low. Okay, so you are near the absolute lows. Now let's explore the last time that you were in this area. Because from what I can tell, You landed. No way. That's fucking unreal. Sometimes my own strategy blows my fucking own. I blow my own mind. It's not even my strategy, dude. It's like a dude with binoculars, and he's like, "Look what I see," and he just hands you the binoculars. Like that's just what I'm doing. I'm just showing you what I see in my binocular. Look at that shit. Hey, look at that shit. Oh my god, dude. All right, so I'm sorry. I got the tism or something. I feel it bubbling up right now. All right, so you got the 50% mark there, and that is going. Oh my god, dude, that is 460. So watch 460. Watch a 448 reclaim on JetBlue on the weekly time frame. But I would not be surprised. Honestly, that is. Oh my god, dude, I love this shit. I'm sorry. So check this out. The top of that resistance. This is unbelievable. Look at this. So anytime you bounce off at an area, the area's 50% mark, when you bounce out, you just want to leave the previous area that was controlled by. And that's basically right. So how do we get out of that range, right? Again, I moved it, but it's basically right there. That little box will get you back up. And then from that point, I know this sounds really silly, I would take this whole space and divide it. This is really simple concept. 50%. Oh, shit. Shot. 75%. 75%. Now I'm going to go over there. Yeah. So even without even looking, floor, median ends up being the floor as well. But that's typically how a range like that, a wide volumeless range will trade. Now, if you break $4.05, who fucking knows, man? It might be over with. And JetBlue is on their way. I mean, maybe somebody buys JetBlue. For real. Well, yes, this live will be posted. So, and again, if you're interested, the workshop comes with 2 months in the Discord. And the Discord is $89 a month. So if you do the math, that's your fucking. It's really not that expensive. So, and it is my time and my energy. And again, if you just ask questions while I'm trading or while I do these things, you could expedite that. But again, for those of you who are asking, because I am here to do Sunday prep, and this is the last time I'm going to talk about it. Maybe one more time before we leave, but I don't need to because it's pre-recorded. But that's it. All right. Big O. Sorry, guys. I'm reading 2 chats right now. 2 chats. Where is my Where's my little window? Okay. Yeah, we're on YouTube, guys. All right, folks. Yeah, just keep dropping the requests if you're on TikTok. If you're on YouTube, I don't need to see that because it's there. All right. Let's move forward. What was the next one? I saw IBNX. Is that right? Or INX? I don't know what the fuck that was called. If you guys are on TikTok with me, if you guys don't mind, tap your screen. IBRX. Immunity bio. Okay, I can do this one for you, even though it makes me want to throw up. All right, so bottom, top. Good fucking god, dude. I just get sick of this shit, dude. I just get sick of this shit. Look at that shit, dude. Look at that shit, dude. That makes my toes curl. All right, so bottom, where do you want to hold? You want to hold something. You're going to want to hold this $2.30. You want to break the wick that you just hit. What the fuck is... Oh my god. Look at that giant box up there. Let's see if I can make something out of this. I don't want to though. Show me something. Oh man, that might be a... Please let me set you down. Okay. Oh, I've been stuck. Oh, I'm stuck. No. All right, there we go. Sorry, I got stuck. Coco, stop. Dog. All right, so that's really interesting. There is a lot of wicks off of the 335 and 325 area. So you're obviously at the 50% mark. You might end up just fucking right back down. And the way that that would likely happen is through the same. Oh my god, dude, this fucking Trade Station. If anybody knows the dudes at Trade Station, tell them they suck. Cost basis is right here. Box right there. So anything below 157, and you will go and make a new low. Okay, cool. Yeah. Cliff. Cleveland Cliffs. Damn, that thing looks like it's in need of a fucking major recovery. And what if you went down into your imbalance, kind of wicked. And so you're just basically, this is the dividing line, right? Between like bullishness and bearishness. And 1, 2, 3, you haven't really touched it, but I mean, this is where you just go and simplify life a little bit. So underneath you, this is the weekly. We'll move down to the daily here. And above you, right? And in this instance, I'm going to leave the top of that red candle off because it does open up and touch cost basis, or the previous candle does. So it drops down into a box, right? Rather than, and typically that will give you a new range, and that may be the case, but I'm going to leave that down there. So this is going to be set up like this. So below you, $15. And above you, you're touching it, that's $16.50. So Cleveland Cliffs. Then following that, you also have a target here. And that is also a 50% mark. Look how it wicks. Look at this shit, dude. I mean, it's just stupid, man. It's just stupid. All right, anyway, so if you approach the 1421 again, you will go and touch this $13 level. And I think that would probably be something that happens relatively soon. In the same breath, right, I know that trend is a deceiver. Hold on 1 second. Yeah, come on, man. Come on, man. Come on, man. Oh, dude, I might have a good play on this one. Actually might be a little fire. A little fire play here. Come on, man. Let me... Sorry, I got Biden. Come on, man. That's 21.50. Okay, so, and that's actually not a box. That's not a box. It's actually an imbalance, right? Because big ass green candles, 50% of that, that's my imbalance. So 21.25 through and above 16.50, I'd be looking to shoot straight up in there and fucking rip. I don't know if they have earnings, but that, and then from that mark, right? If you end up pulling back, this thing would see a fucking dumpy, a dumper, the great dump. Hold on 1 second. What is this? Am I wrong? Oh shit, I might be wrong. Okay, listen. If someone doesn't show you that they're wrong, I might be wrong. So hold on. I had to rethink. Check that out. You got a lot of confluence in that. So I'm gonna, rather than do any guesswork here, I'm gonna add my handy dandy fucking Ooh, shit. All right, let's do it again one more time. Ooh, shit. All right, so maybe because this honestly could be you might end up just legging down now, but Cleveland Cliffs, uh, that's a tough one. Because when I look at this one, I see all of this empty space up here, and normally that gets filled. And when you look above you and you box this out, you'll notice the same thing. I mean, this is a stair step, literally. I mean, that is a PotterBox fucking exhibition. So I think above 1650 through the $18 level, start aiming up into this area. And that could just be an establishment of where resistance is in the overall downtrend. Because one thing I don't have is an uptrend. That's something I don't have. So right now the move is down, but the retest that comes off of something with a big ass range like this that hasn't gone into its lows, that's obvious. So realistically, it's underneath $13 or something, a rejection above and a pushback down. So they just beat earnings, maybe. All right. So it's probably just your cursor that's big is the problem. No, dude. Even when I had a little cursor, it didn't matter. Oh come on, man. Come on, man. I have not looked at this in weeks. Get real. Whose chair is that? Oh my god, dude. That is wicked. All right. So anyway, I haven't had alert go off on that one, but I do have a sell signal. The sell signal is 14. I have 1450, 1460. But let's go to the daily on PLTR. All right. So virtual hot dog water. It looks like, if I recall correctly, $15 is currently your lower time frame cost basis. Above you is this little bastard, and it has its own cost basis, and that's 1630. So you're going to want to see a bounce, and luckily this is the cool thing, right? All right, hold on one second. Coco, good god, dude, pick a room. Pick a room, dog. Jesus. I'm about to fist fight a German Shepherd. No, just kidding. Love that dog. All right. Ow. All right. So this is how simple we can make a lot of things, right? Above you, that green candle right there, and I mean even that red candle, 1527 and 1538, but more or less right here. You recover that, and that could get you started, right? And that's where we zoom down and we look at what's above us. So you go to the 4 hour. Now we can identify. You can just if you're at listen. This is fucking worth it. If you guys are on TikTok, if you guys don't mind, tap in the dog share your screen, or just drop a comment, something of that nature. This is something that's worth noting. So I get this question a lot, right? Like, how do I take a weekly play, right? Like you're saying, Garrett. That if we close, underneath or break cost basis, that we're going to go and break. And because we've tapped off of this 1, 2, 3 times, that PLTR is more than likely going to dump, right? I mean, it's just in the charts. It's, you've got support way down here. You've got, resistance that's kind of wonky, but that one's not playing out very well. So there's a lot of reasons for a person to potentially be short here. So you would go and say, all right, well, we're at cost basis on the daily, right? Or we're virtually we're at it, or maybe even we closed underneath it. But the question is, right, I think we're at it. I think we're at cost basis. I'm seeing too many bounces, too many holds, candles. It is cost basis. So this $15 mark is cost basis. Now I go to the 4 hour and I say, well, how the fuck do I get, how do we break? How do I break? And typically people short at the lows, and it's a thing that it just keeps getting repeated over and over again. They won't stop, and it will never stop. And if it does stop, the market probably won't work anymore. So you short at the lows, right? And unless we get a fat gap down, 1450 or something like that, but you short at the lows, and a lot of the times that's where they bounce it back up, because the purpose of building a box is not to push down, but is to pop up, retest something above you, and then you take the fucking trigger down, which is cost basis breaking on your way back down. But I digress. So that being said, I can go to the 90-minute, right? The 90-minute. I'm going to go here. I don't know if that's a box or, and here's the thing. This is a box. So you could even go and make a small low. If you gap down on PLTR and punch through this, you'll go straight up into this box. If PLTR opens up above 1509, it will immediately go straight to the middle of that candle, 1516. No problem. Promise. If it goes to that and breaks it, your target is the bottom of the box here, and finally the cost basis, or the 50% mark. If that breaks, you're going back up to probably go and touch one of these next highs, right? So you can then say, all right, well, we're at a daily or weekly cost basis, and I'm looking to short this fucker. So you say you gap down to like 1490, small bounce level there. You wick down, you break cost basis, that gives you a new high. You hit the imbalance. You pull back, you bounce off the top of the structure like you should. You maybe a little build here, and then you punch over it. From that mark, we run up, and we finally go and rather than making a new high, right, we end up at 1550, which from what I can tell is maybe, no, it would be 1560, excuse me. It's a small box up there, which would theoretically line up with the dynamic or trend control. So I could say, right, and now that I'm looking at this with trend in it, I could even say, well, maybe you gap down and you gap down to the floor, right? So you gap down to the floor, that punches back. Now you hit this mark, right? You're building, you flip it. The same box that you just punched through, typically you're going to, so here's what's going to happen. As you go back up and say you punch through this, you'll get a bigger move through that box into the imbalance, and that's where the next box forms, where there is none. So you would look for something like that, right? And how that works, right, or how that builds could look like something like this. Punch back over, you get that dynamic high, and then you're looking and you're basically saying, okay, well, box, right? Cost basis, same boxes, but now you have a multitude of triggers and stop losses. So let's say PLTR falls back into 1531 and breaks 1528. You can use 1522 or cost basis as a stop loss, knowing that if price settles back up there again, it will go back up. So when your trigger or your stop loss is based off of something will reverse, this is where this could be a double-edged sword for somebody who's not able to wield it. Because if you know that if it breaks a certain market, it will go up, and you are still negotiating it means you don't trust your strategy and you're going to fail. So, and I mean, I could literally look at the box that you built before you. Do you see how you don't close above that cost basis on your way down? Look. And you create a box up above it. So I know that if I just break this box, even that box or that dynamic would play into it, therefore moving me into a new high. All right, so PLTR is going to $11. Damn, dude. You rich? Anyway, I actually have a target of around $10, slightly lower than that. If we break, I think that's a small target. $11 is literally just right here. I don't see anything there. Yeah, I don't see anything there. The only thing I see 1050, right, where you got beautiful candle closes. You have a wick off of 1150, right? Which is actually the imbalance. So here, here, or really here, here, that's the 50% mark. So I say 1150 is going to bounce, but I think you move down potentially a little bit lower to the $10 area. What's up, Briggs? All right. MO was also a request that I got. Oh my god. Jesus. Damn. That can't be real. What a fucking chart, man. Oh shit. Holy dog shit, dude. Is that a box? I can't tell if that's a box or not. Oh my god. Oh. I fucking love this shit, dude. All right, so I am under the impression currently that you are near a cost basis, and I wouldn't fucking sleep on the fact that this one might end up fucking bouncing back on you. Listen, this is just a projection. Don't fucking just a projection. And in fact, you might even wick down a little bit lower because again, I'm a little thrown off on cost basis. It actually might end up being, oh, you know what? So I got to go with most recent price action. Hold on 1 second. You might be off of that 38.42, but here's what I'm seeing, right? And this is where this is actually this right here, which is what most people would call a rounded. I mean, it's not at the top, so it's not a rounded top, right? But a lot of people would say exactly that. That's a rounded top. But what it could end up being is a multi-tiered catalyst, right, or a snowball effect in disguise. So let's talk about that because again, I don't want to deter anybody from taking this down, but you should know what's up above you because again, I say 38.50 for sure. But here's how this is gonna fly, right? So you have a box here, you have a box. Yeah, that's the box because look at the two wicks off of it. You've got a box there, so you've got cost basis 42, 43, cost basis 44, cost basis there, and then finally an imbalance. So you don't have any boxes up there. You don't. That's unfortunate because I mean, it doesn't mean you can't go. It just means that it's going to be a little bit harder to do so. So, and I label those purple. Is this from TradingView daily chart, bro? No, this is not. Put a chair pattern on it? Nah, I don't do chairs. No, thank you, man. I appreciate that though. Yeah, no. I don't do any patterns. No patterns, never. The only pattern that I'll recognize for what it is an inverse head and shoulders, but no patterns ever. But yeah, I think 38.50 is your nearest bounce level. Let's go to the daily. Yeah, so you're going to want to avoid a close above 40.45. That's just step one. Look at the left. Ugh. 38.42. 38.80. 37.87. Okay, cool. Yeah, so I'll stick with the 38.50 here. I mean, look at this 38.50 floor. So, Where can I learn more? There is a lot of free content on YouTube. In the Discord, I will be. It's taking me a while because I've been dealing with some health stuff, life stuff. But putting out the basics on the PotterBox. You'll see some links in there. But on YouTube, where I'm streaming now, is most of the educational content. Oh my god, almost stretched myself in half. If you, I do have a Potterbox workshop, but that is, if you want details on that, you can look in the Discord. All right. Anyway, what was the earlier time frame? That was the weekly. That was the weekly. Okay, so again, you had earnings. You came down pretty quickly. Let me give you a bearish target because at the end of the day, right? If that's not true, 34.15 easy. 34.15 easy and balance below. That would be one of the first areas I'd be looking for. That's, yeah, 38.50, 38.40 would be the first imbalance I'd be looking at. So, all right, let's take a look at Google. Damn, boy. Oh my, yo, you guys know I haven't even looked at that. You guys know, I mean, I did look at the but not the weekly. Damn. That's what's up. All right, cool. Fuck yeah. So that that shows us a lot because you will get a Google A dump down to 110 easy. But here's how this lines up dynamically and confluentially, because this is fucking money, guys. This is again strategy on. Look at it. Look with your eyes. Look at that shit. 50%, 122.25. Break below that. And we're going to go ahead and start looking for a breakdown. I'm going to go ahead and put a target. First target, 113. But I would be aiming directly below to that bad boy. Again, the 50% mark that I'm referring to that you're going to possibly go to is also that 112.75 and 113. That was also this cost basis. It's on a double top. That is not a double top. No offense. I again, that's not a double top for me. So, again, you guys, if you guys use patterns and stuff like that, that's all good. The Moon Investments, again, I'm here sharing my shit. If you're here to learn, then learn. But I do want people to learn based on what I'm teaching them. And if they don't want to learn that, then they'll go out and learn what you're talking about, which they can Google. You know what I mean? So like they can Google that stuff. So that stuff will never have any impact. And I mean this, respectfully. I will never ever take any of that to heart. I will never listen to any of it. It will never mean a thing to me because I have created something that I trust that repeats itself. Double tops don't repeat themselves, right? Double tops are deceptive. Just double tops are easy money for market makers. Triple bottoms are fucking, whatever, all that shit. I mean, dude, I can literally, I just said triple bottom. 1, 2, 3, pump. That's supposed to be a full reversal. You fucking dump hard. So, and then you get a what double bottom there, but double bottoms usually you don't leave the apex or whatever the fuck. So thank you for the nice puts on Tesla. Yes, sir, buddy, man. I know you've been fucking crushing it, man. Yeah, I've had a lot of people really, really doing well. And again, people look at my chart and some people want to laugh. When I was new, um, I obviously didn't talk shit. I just would listen to people. And I don't know. I mean, maybe I just have a good bullshit detector, but like, I just knew that like whether I was being sold something or whether someone was sharing information with me. And so like, again, you want somebody's time and effort. It doesn't matter what it is. They're probably going to charge you. But if you want to learn something, strategy for free, or somebody's giving you that information, I'm going to I'm going to be asking or almost like drilling them, like, you know, where's your stop loss? How do you know where to do this? Like, because again, if you're not profitable, you should be exploring all avenues. Kids who fucking are deep throating ICT every single fucking week, and I ask them, are you profitable? How long have you been doing this? How many fucking lectures are you going to go through until you're able to repeat that and make it something real? And then you got to go through fucking prop firms. So like, obviously if something's not working, you should diligently be digging through and saying fuck that, fuck that, fuck that. You know, there's certain things you can spend time on, but if you don't see it work, or if you have 5,000 setups to remember, it's just not worth my time. All right. So anyway, Google below that 122 mark. We'll take a look at it. Um, yeah, here's a little bit more of a detailed daily map here. So this shows you, again, this is the box that I'm referring to at the moment. This is the 119.17 box above you, or an area that if you were a seller, you would not want to go, or you may end up going to retest because again, there's a reason that buyers pulled you out from above that 122 area. So I could or would be looking at the potential to run up into the retest of 127.50 and 128.90. That would be one of my first takes. Now, again, coming off of earnings, how you react, a lot of the times, if it wasn't bad and you end up fucking going down, that could be a context clues. But what I really think is kind of crucial here, or key in my opinion, is the fact that, right, we run in deviations or of trend. You're sitting on top of it, right? So this old trend and that trigger, my cost basis below 119.50, yeah, I'm short, and I think people should be too, because underneath that, that would trigger you to move straight down to 109. Nothing but empty space and an imbalance right here, which I'm going to go ahead and label as 113.40. But weekly demand, weekly supplies, good channels, finally someone who actually. Yeah, I don't do supply and demand. I do a different version of that. I know that what I just identified is definitely going to be, that is basically, I just use that zone. But it is a, you could look at what I do as like a form of supply and demand, but I do focus on the box. It's take supply and demand, merge it with the Darvis box, throw fibs in there, and volume profile, and you've got something along the lines of what I'm doing. But I've taken bastardized versions of all of those, and through my observation in the market, come up with something different. So, all right. So yeah. Anyway, in balance, right? 125.80 bottom floor of the boxes is here in most recent price action. In most recent price action, the bottom of the box, the bottom of this area would be 128.85. What the fuck just happened? Are we good? Oh. Yo, it's so cool. Crisp. Watch this shit. I don't even show people this. Look, I don't know why it just stopped recording, but it's really cool. I guess if you guys ever want this, Crisp will transcribe the meetings. Watch this with AI. Look, it's taking everything that I just said and it's putting it in like it's fucking. It actually is really impressive. I was actually like, it did the other day. My dog shit on the floor and it was listening, and it gave me like point by point on how we should clean up the poop. It was fucking insane. Look at this, the gist. Look, look. Action items: create a watch list for potential trades by scanning. Obviously, clearly monitor trends closely that caution against. It just like, and then here's like a good summary. Economic data and earnings discuss outcome. That's fucking crazy, dude. Sound check. At various points through the meeting, there were requests for sound checks by different speakers, including Mike, who was asked to check his microphone. AI is stupid at the same time, bro. But it is cool. It is cool. It's cool. I think it's cool. My daughter stepped in it, and we were like, it was just, I don't know why I was listening, but ICT works 100%, 10% of the time. Listen, I kind of think that dude's a narcissist and just likes to talk about himself for long periods of time, but who knows? I don't know. All right. Google Bounce. Yeah. Okay. So let's go to the hourly. Obviously, I can take this and I can literally break it down into. I mean, this is fucking sick right here. Holy shit. So yeah, watch Google above 122.50 on the hourly. See if there's anything on the. Oh my god. Oh, that's right. Holy fuck. Remember, I don't know if anybody remembers this. We talked about the pinch on, look at that shit. So this is the lower time frame. Everything that I do, same thing, right? Except for this time, when you're in a box and you have an uptrend, right? I'm gonna chart that. I'm gonna chart that because what that is if you are going to bounce, right? And right now it doesn't look like it will, although trend is always ready to expand. I can use, guys, this is, oh man, I love what I do because when I'm explaining it, it's not guesswork. I don't need to fucking be like, oh well, this pattern looks like that. Like, how the fuck do you set a stop loss on a fucking diamond pattern? Ask Wealth on Mars that shit. How do you do that, right? And why is it that a Googleable pattern is the reason that you're fucking taking a trade? It makes no sense. That's your edge. I mean, you really start to sit down and think about it. That's your edge? A double top? Okay. Anyway, sorry. So you got two boxes here. One is going to lead to this is where if you get two boxes stacked on top of each other, a lot of the times you can get chop in between. So this will lead you down to 121.50, 121.50 breaks, and you will be making a lower low or an equivalent low at 121. And from that point, you could look for a potential expansion of trend, and that would likely be the last chance that you would have to do so, because a lot of people, again, get absolutely dick slapped because they take trend lines that are hand drawn and they say, I'm going short. Okay, well, good luck. So anyway, what we are, like, without question, is in this downtrend on a lower time frame, without question. So we've got plenty of room down. We've got 118.30 at the bottom of this channel, right? So at 118 even, we can go and look, on the daily, see where 118 even is. 118 even is way the fuck down here. And that's going to put you through the box. So I would imagine that channel collapses. So in my opinion, I think that there's more chance for an upside retest at the moment than there is for just a complete flush. So is there any reason that I like looking at the 90-minute time frame? So let me tell you guys a secret. There is this is where there are no rules, right? There are only the rules that you make, and those rules should be based off of something tangible. Let's look at something that's tangible, right? I need structure. I need a box. In order to make a trade, right, I need to find a box. Is this the cleanest box in the world, right? Maybe the one above you, right here, nice and clean, but this is kind of ugly. So when I'm moving through time, let's say the 90-minute, look at that. So the 90, yeah, this almost answers my question. So look, the 90-minute that's between, the fucking, it's right in between that 1 hour, 4 hour area, right? 2 hour. It is, I am here. It's like, I don't want to overcomplicate it because it's not complicated. I am just quite simply looking for clean structure, because and this is something that I found to be true via a stock called JMIA a long time ago. I was trading this thing's earnings. I made a ton of fucking money on that. But one thing that I had found was that that stock liked the 2 hour time frame and was so clean on that 2 hour time frame. But if you went to the 4 hour, that shit didn't make a lick of fucking sense. I couldn't find structure on it. So when I'm moving through these time frames, it's because if the daily doesn't work, or I can't find what I'm looking for, or it doesn't make a whole lot of sense, I'm not going to take a trade if I don't know what I'm fucking looking at. So I'm going to move down. 4 hour. Does it make more sense, right? Can I consolidate what the fuck I just talked about on the 4 hour? Remember what I just talked about above you? And just go look at this and say, okay, here's the bottom on the 4 hour, which the higher the time frame, the more prevalent the level. So 122.25 is the fucking floor. And if you open up above it, you will go up. And if you go up, you will hit cost basis. Cost basis is 122.75. If that breaks, you will go back up. You will. You will go back up, and we will see a retest, whether it be 124.50, period. So anyway, if you guys are on TikTok, if you guys don't mind tapping your screen until your screen breaks. Oh, dude, yeah, Wom's a goat. He's fucking eating up anything he can. I don't know, dude. I don't know where the goat. I know greatest of all time, but listen, if you guys don't notice, there are people who I absolutely have no problem with, and they're kind of dicks too. But I mean, at the end of the day, this is a very real fucking thing. People have very real lives, and we all have real money that we're trading. And the idea, the whole image that's been sold to people is fucking. It pisses the people off who do the thing, because we all know it, right? And you guys have seen my Discord profits. I'm not that guy, but we know that those people are making money from courses. We know that they took information that was free and they changed it around, copied and pasted it, and fucking threw it up and sold it for a ridiculous price and marketed the fuck out of it, because marketing and triggering people's fucking want and need to fucking improve their life is a lot easier than trying to provide people who don't really know what is going on information, right? Because there's a lot. But when you dumb it down and you're like, it's just a pattern, it's just a line, you can simplify a lot of things. But can you quit your job within a year of getting into trading? You would be one of a billion. I mean, literally, it would be a fucking anomaly. When I was at my 1 year mark, I was making money and losing money and making money. 2 year mark, making money, losing money, making money, losing money, making money, right? And then year 3, making money, maybe. And dude, last year, I had a red month. I had a red month. I haven't had a red, like full on red. I've had flat months. I've had not so profitable months, but I had a red month, right? Who the fuck is going to prepare somebody for that? Because the idea that's being sold is that you're never going to go red. And most people can't deal with being wrong, or they don't want to feel the pain. And so they run from it and never learn the lessons. Because everything that they're doing is just in an avoidance to pain they haven't even felt, or they don't even know. So they just try to be careful and learn what they need to, but you're still a fucking human, and you're still going to do the same shit that everybody else probably does. And so don't take all of your money with you. Use $100, use $50, $500. Be prepared to lose all of it. If you do turn it into something that's tangible, like 500 to 10,000, we've talked about this, we've seen it happen. Withdraw half of it, genius, right? Take half of it out. It's free, except for taxes. So can you make it something that's real and pays you and makes like life easier? 100%. I've done it. I've helped people do it. I've helped people help people do it. But if you come into this and you're not focused on being a trader first, and it's just, and I get it, we are here for money, and that's the period, end of story. But at the end of the day, if you're not here to be a trader and learn what that means, and dive in and be like at year 1, if you, because most people have blown their account by then, like, and they've put all their money into it. If you've gone about it smartly, right, you're gonna know where you're at in the system, and you're gonna be like, okay, I gotta keep going. Anyway, I'm not your liver. I'm Potter liver lifer. I'm not your liver. Oh my god, that's funny though. Listen, I have a tax person do this shit. Thoughts on Elf? I will look at Elf because you know what? I bought Elf at in the 80s, and it honestly looks like it might end up. The chart says down, unfortunately, and so we'll take a look at this really quick. Again, this is one that I actually really I got a good trade on that one because I took this one literally before earnings came in, bought a good chunk of equity, and I let that thing go, and I did take some profit up in the highs. Again, when something starts to go sideways and then re-enters, like again, if you have anything that looks like that, right? If you go back into that, I'm going to start taking profit. But that being said, you are, oh man, I love this shit. Check this out. So you're right here, and you've already tapped off of that. And the tap off of that was a pretty decent response. But here's what you couldn't do. You were unable. Look. Oh my god, dude. The chart is showing you where it will go up. You know what I'm saying? It's showing you right there where it will go up. That's 105. Right? Now, what it has done is wicked up, grabbed all of that shit. So basically what you just saw, and this is where that's like the second level with the Potter box, right? Is like, okay, now the daily went through the box, made a new high outside of the box, and then closed underneath it. What does that mean? Right? That means that you just dispensed of all of the volume, because when you move through a box, you're taking that box of volume and you're spreading it across, right? It's like you're grabbing a box of flowers and just fucking, this is, no, that metaphor's not going to work. But you know, you get what I'm saying, right? There's a box of volume and you're just fucking passing it out, and it's pushing you through and up to the next level. So by moving through this and then yanking it back down, you grab that volume and then you turn it bearish. Now, with that being said, you got a wick off of this shit underneath you. And in most recent price action, right, we're going to go ahead and mark this 50% mark. That's going to be $93. So ELF at the moment is bearish in a sense and does have a level below you to look for a short. That is going to be 99.85. From 99.85, I believe you will go down and touch that 93.50. From 93.50, I think that's where we are either A, going to get it, because right now, if you are going to move down, and this is a period, end of story type of thing, if you're going to move down, come on, motherfucker, you will always go and find resistance. So you may be looking at another sharp leg, right? Or just a bounce, and you could end up going sideways and building. You could still go up from here because you have not lost anything. And that's the main thing here, is that you have not lost a damn thing. I will say, though, weekly candle wise, not looking great. Daily candle wise, definitely on the bearish end of things. And you have a thin wall underneath you, very thin. In fact, it's been touched 2 times. So by breaking through this $100 level, yeah, I would look for that higher time frame cost basis to break and drop down into those 89s. So yeah, they got earnings soon, so all right. Yeah, when I look at it, I see 1, 2, right? So I mean, yeah, maybe sideways another week, right? Maybe another bounce back up. So, all right, let's go ahead and take some last requests, guys, and I'm gonna go ahead and hop off for the night. This will be posted on YouTube. 3M. I thought you were asking me for the 3-minute chart or something. All right, MMM. Let's take a look at it. Oh, shit. Okay, cool. All right, so looks like, and I might have been on, well, this was a projection for bullishness, but it looks like I might have been right on that. But let's, yeah, I definitely was. So you tried to recover. You basically went up into or around that 50% mark. You were, you know what? To if I'm being specific here, I would actually say that you just refused to climb into that floor, right? And that's pretty simple. So you just refused to go back up into that floor. Um, you drop down, you know, lower time frame. You had a series of cost bases. You had one, you had two cost basis. Cost basis. Okay. Now, let's go back out to the, oh, damn. All right, so obviously, if you can see right here, I've got the wicks. I don't know why this is wicked out, but let's fix this up. All right, so if I'm not, I mean, this is, hold on one second. I just want to make sure my chart's not off. Yeah, so take a look at this. You lose your channel. This is right around the lawsuits. And anytime you lose a channel, that's called a loss of control. That means that the unexpected selling pressure has driven you out of control. You typically regain that control, and that usually will squeeze sellers out. That happened. You then dumped. You are now at the 1, 2, 3. This is again an area where you did the same. I have this giant red mark. This giant red mark is actually a giant fucking cost basis, and that's where you're at currently. How you respond to cost basis is typically telling on where you're going to go next. So when I go back to the daily and I look at this, right? So you just sitting on that. So I would have to go to the lower time frame here and come on, dude. Thank you. Cost basis. 86.35 to the downside would be the next leg down. And that next leg down is pretty fucking obvious in my opinion. Yeah, you'd be looking at something like this. So you're kind of sitting, and I would imagine a break there, and you're going to go find that $83 level. But otherwise, being at cost basis, I think that you have two targets above, and that's 96.85. That's the target. You're going to have an imbalanced target, and that's going to be 93.50. So that's basically stage one. But if you look at this and you say, okay, oh shit. If you look at this and you put your box down like so. Hey kiddos, you guys got to get ready for showers. School time tomorrow. I'll be out in 5 minutes. All right. Anyway, I got kids, bruh. So, but you wouldn't have known that at the time, right? You would have the benefit of hindsight to explain why. Jeff, do you think all the information in future direction is captured by all the? Absolutely, absolutely. So what I'm doing is I'm looking above and below me and establishing what. Yes, absolutely. Jeff, I would not fucking say that if I didn't fucking haven't seen it, haven't done it, haven't watched it happen continuously afterwards. And so what I can tell you, Jeffrey, is that if your candle bounces and moves up and closes above this mark, that it will make an effort to hold and close all candles on top of it, and it will, listen, you can fucking, it will reject off of 102 before if you claim the floor, that is the only resistance you can hit. This, yes, I stand by that, absolutely. So it is, yes, something that you can look at in hindsight, but once you have the blueprint in front of you, it is not hindsight, it is future. It is saying that, okay, if I break back up above that 102.50, you're going to leave that range, right? Leave that, and it might be that we're sitting like this, and I might be off. And the way that I can figure that out is by moving into a lower time frame and looking at the same structure. But regardless, if 105.50 or that 102, and I imagine that's two boxes stacked on top of each other, but I know that if 105.50 breaks in this case, you will move up into the 120s. It's just a system I have watched happen over, and I will bet on this system. I will bet on this system until something fucking better comes, and I don't think it will. Because I can't, as far as from an investment strategy, you could use this strategy to get into whatever stock you want and know that you're with buyers. So if you decide to buy when it gets to the floor and it does punch back, your average, listen, when you get the signal to sell, you're still green. Why? Because if you get in right here at a candle close on the bottom and you punch back and you come back down, first of all, you're going to build boxes. But second of all, you're going to pull back. Come on, motherfucker. This thing is just out of control. You're going to pull back, bounce off of cost bases. Typically, you're going to go and hit the sell wall right there. If you can't break outside of that, you're going to come back down and punch through this and then go make a new low. So you'll have a multitude of opportunities to either hedge into your stop loss or just say that if 105.50 is broken, you get out with an average of 97.75. And if it goes back up above 111.50, you can get back in. It's that simple. So, no, and again, before I take the advice of any other human being, I will always look at the chart first. And if someone says Head and Shoulders is bearish, I'm going to go look at, let's see, chartpattern.com, right? I'm going to go there and I'm going to go fucking look at the statistics behind this. That is not the right one, I don't think. Hold on one second. Educated. This might be it. Yes, this has some of the stuff. So I think you can go there. I'll have to find the right one. This is not correct though. And what it does is it gives you the statistics for I think it's like 30-year statistics behind each pattern. 30 years of statistics, and I can guarantee you there's only a few that, and here's the terrible thing, is that there was one year that a bull flag outperformed the S&P by 500%. The following year, or I think it was like 2 years after that, the S&P like fucking outperformed that shit ridiculously. So you need to be able to rely on a system that works over and over and over again, right? So anyway, the only variable with my system is me, right? I can fuck it up. I can draw the wrong box. That's it. I'd rather make me the variable than anybody else. So now look at the yearly chart on MMM. Damn, boy. Look at that. Yo. So same concept, homie. Same concept. For real. And you guys can't even see that shit. Look at that. Look at that. It is blessing. It's a pretty cool chart. All right, let's go ahead and finish this up. CHRS, Coherus Bioscience. We are definitely not looking at the yearly on that one, but that one is fucked. Totally fucked, my friend. Why is this charted? Who charted this? Hey, yo, what? Okay. Isn't that funny? So you said FDA approval? Yeah, so you know this thing is actually sitting on support, right? At least dynamically. I haven't touched, dude. I don't even remember doing this. In fact, my channels don't even have red, and they don't look like that anymore. That's so funny. You guys, I can't even see that on my camera. Okay, so let's look at the date. Ooh, shit. Okay, that's good. That's real good. Look at this. Damn, dude, you might have a banger. All right, so this candle, where did you wick off of? It was 350. I'm sure something on the lower time frame. Ah, yes. Come on, bruh. Come on, bruh. 50%. So 355. Oh my God, you got a stack. Good stack. All right, so your job. Oh man, and you got another one, dude. Come on, bro. Another one. Another one. All right, so hold on to that 330. Um, I think as far as like limitations, $3. You don't really want to lose that. I think $3 is a 50. It's 50% of this candle. So being that if you do open up in this range, watch for a build, little bit of sideways action, maybe even a wick down to that $3 mark, but ultimately maybe 9.25, but I'd say $3. And if you can punch through these two, when I tell you that you have this, when I now listen, I don't know if I'm going to trade something like this. Maybe I'll take a small position, but when I see shit like this, right, and I can go and it's literally stair steps. Watch. 1, 2, yeah, 2, 3, 4, 5, 6, 7, maybe. And then cost basis, cost basis, cost basis. Look at the wicks. Come on, man. Look at that shit right there. Big fat wick. TikTok, you guys might not be able to see that. Right there. Cost basis, cost basis, cost basis. So what happens is if you punch through these two and it's big volume, volume added, volume added, volume added, volume added, volume added, volume added, and then, right? And then you're going to see how that, and then you've got also, right? Let's not forget, we're on the 4 hour. If you've got a area where you stop, right? That 50% area where you've got the majority of those three cost bases right there, you're going to rip. You're going to rip dick. So I'd be looking at 670. Again, I don't do the pharmaceutical shit, but boxes are boxes are boxes are boxes. And it does look like that you were able to hang on to that $3, 314 area. So I'd say 314, 312 retest, but ultimately, if you can get above that 360 and the 383 area, you could be looking at a juicy run. Nice and juicy. Oh my God, yeah, you guys can't see. I already did MOS. It's on YouTube. All right. I'm going to go ahead and close it down, guys. We've been streaming here since 4:30. So That's 2.5 hours here. If you guys end up taking the work, by the way, if you guys are in the PotterBox workshop, it will take a. It's I am literally sitting down and I am walking you guys through each fucking thing, and then I'm answering. This is not your course where you just listen to me talk. I'm gonna stop. I'm gonna ask questions. I'm gonna ask you to ask questions. I'm gonna ask you to answer questions. So it is not a sit down. You can watch the pre-recorded version or or the recordings, and they will be recorded. So if you miss something, but if you're in the PotterBox workshop, you got to be ready to work and participate. If you're somebody who's quiet and introverted, I mean, first of all, trading is going to be a little bit tough. But I mean, you can be quiet and introverted. You don't have to be a fucking extrovert to trade. But having confidence, being able to feel confident in your positions, that's not attached to being an introvert. So, but anyway, I hope you guys have a wonderful night. I hope this helps. I hope you guys got some insight on how my system works. If you guys have any questions, please DM me on the Discord. If you guys are in the Discord, maybe talk a little bit more, so that way you also don't get booted, because I have a robot that boots people who are not active. So if you're in the Discord, snag you have to get a role from the link in my bio, the WAP. Go get the free shit. It's right there. Free Discord lobby. If you want to trade with us live, ask questions live, do everything live, you can get one of those too. But I would implore you to try on your own before you buy anything. You should probably try on your own. So, if you use hollow sticks, you can use. You know what though? It kind of for some reason I have done that, my friend, but that's definitely a personal preference. I don't know, and it's funny because on TradingView my candles are a little bit more opaque, but I'll check it out. I am. And that's I think that's a good sign. Obviously, I'm always willing to. I mean, maybe it does end up being a little bit better. I don't. Yeah, I'll check it out, but I don't like the ghost bodies. We'll have to change the colors around. But that is again malleable, right? Willing to grow, change, learn. Something we got to be. That might be better. We'll check it out. All right, y'all. Have a good night. I will catch you guys in the next live stream. DM me if you guys would like to join the PotterBox workshop. That is 2 months in the Discord included, and everything that I fucking do. So by those 2 months are done, hopefully you can just leave and never talk to me again. No, just kidding. But you can not need anybody. So, all right. See you guys later. Peace.